All right, folks, we're going to let everybody start flowing into the meeting, and then we'll get started here in a second. All right, folks, thanks for joining. We're just going to take another minute or two to just let the rest of the room come in. All right, panel, I think we'll go ahead and get started. This is Darin Coble. I am the founder and principal consultant at Versa Business Partners. We're an HR consulting firm that also has a branch that provides career services and executive leadership coaching. And so we've been in business since February. And whenever we saw COVID going on and saw the pandemic starting, we had spoken with a lot of businesses just as we were getting started and getting out there, and noticed that there was a gap between information on everything going on with the pandemic and the different funding supports that were going to be put together by the government. And there was an information gap. And so what we did is we reached out to, in partnership with Employer Flexible, a PEO firm that's got a strong group in the Bryan College Station area. Employer Flexible and I just reached out to different chambers of commerce in the area, and the team at Bryan College Station just engaged immediately. They were just thrilled to have a group to help make connections, and we worked with the SBDC to also leverage their network to get folks out there and get a couple experts on. And so it's turned into, we're doing it now about once a week, where we'll provide a webinar with helpful information for business owners out there. And so I want to just say thanks to Employer Flexible, to the Bryan College Station Chamber of Commerce. They've been awesome, Carrie and the organization there. And then America's SBDC, the Texas Gulf Coast Network. If you were to check the registration page, you'll see that I post a lot of the SBDC webinars out there now. They have really kind of been able to get caught up and understand from the SBA the expectations, the programs, and they're putting out a ton of great information. So we were excited to be able to, and grateful to be able to serve as a bridge for information to the small business owners, as the different government groups and the folks on the call like today have been able to read through all the laws, rules, regulations, and serve as an export for us. So want to say thanks to ABB CAUTHORN with Anco Investment Services and Raymond James for being here. And just basically, he reached out to me saying, look, I think there's some more information that we can provide as it relates to the CARES Act, PPP, retirement plans, and his partners and network out there that he's brought this team together. So I'm going to hand this off to Ab and let him introduce the panel. And then we'll hear from the team, from Cameron and Russell and the team on the different avenues and paths around the finances. And then we'll open up questions at the end. If you have questions as we're talking, as it's on your mind, just please go ahead and feel free to type it into the webinar chat or into the question and answer section. We'll be monitoring both of those, and we'll open up questions towards the end. Thank you.
Well, first of all, thank you so much, Darin, for all your hard work in getting all this together and for all of the webinar series you've been doing over the past couple of weeks as we've been going through this pandemic. I think it's been providing a lot of valuable information to local businesses out there. So thank you so much. And to the rest of the panel, thank you all for coming on and sharing your expertise when it comes to PPP program and what all we're seeing with the CARES Act and how it's affecting employer-sponsored retirement plans. With that said, my name is ABB CAUTHORN. I am a financial advisor with Anco Investment Services in Bryan. I focus on comprehensive financial planning for individuals and advising local businesses on their 401k plans. So that includes selecting of providers, working with the third-party administrators, and providing investment education to the employees in order to help them accomplish their financial goals. With that, I will pass it on to Cameron with First Financial Bank to introduce himself. Thank you.
Ab, thank you for setting all this up and for the introduction. As Ab said, I'm Cameron COMIRE. I'm a commercial lender here at First Financial Bank in Bryan College Station, formerly the bank and trust here in town. First Financial Bank has been in existence over 100 years, and here in town, we just started in January. So with that, I have helped to facilitate for our region over 500 PPP loans, and that's what I'll be talking about today when we get to that point, is PPP loans. Obviously, the next step in those loans is the forgiveness portion, and hopefully I can address some of the questions there. And with that, I will pass it over to Mr. Russ Hooker.
Hi, everyone. My name is Russell Hooker, and I'm with Milton 401k Associates. I'm one of the shareholders here. We're based in Houston, Texas. We're a third-party administration firm, TPA firm, on the qualified plan side. And so my role here today is hopefully to give you a little bit of information about the CARES Act and how that impacts your retirement plan. Like Cameron, we get a lot of questions on the PPP loan and how that can tie in. Appreciate Ab and his group including us in on this. We do a lot of work with Anco there in Bryan College Station, and then MassMutual is also a big partner for my firm. So again, we're just sort of compliance nerds that are in charge of trying to interpret all the regulations and practical application. What does it mean day to day to small business owners primarily? Again, I'm out of Houston. We have offices in Austin and Dallas as well. So a big presence here in Texas. And again, thanks everyone for including us. And with that, I'll flip it over for Mitch for his intro.
Good morning to all. Thank you so much for joining us. Thank you guys for putting this together. My name is Mitch FLAX. I've worked with MassMutual over the last 7 years and have been in the industry for the last, really serving business owners all in respect to their retirement plans, whether they be a for-profit 401k company or a nonprofit organization, and serving the nonprofit world. Really what my goal here today is to help you guys understand how employees and employers are both reacting to the pandemic, how we're responding, and then hopefully I can give you a few nuggets to where you guys might be able to take some best practices on ways that you might be able to reduce some hard dollar expenses, and ways that we might be able to help educate your employees. So look forward to the call and welcome a lot of participation from everybody. I think the more questions we get, the more informative that it will be for everybody. So thanks again, and I'll turn that back over to Darin.
As you've heard and seen, AB has really pulled together an awesome team of experts to help us navigate this time and to put us in touch with the right folks to be able to get these get the facts and get the information on how we navigate. And as our first speaker, Cameron, is gonna provide, it's a hot topic, and things are coming hot off the press pretty much every day. And so he's been, from a banking perspective, been really trying to stay at the forefront of it. And so I'm going to hand off to Cameron with First Financial Bank and just have him go ahead and open up and tell us what should we be thinking about as our businesses get going and we look at the PPP, and what loans we may or may not have gotten, and what do we need to be considering, especially as it relates to the loans.
Absolutely, Darin. Thank you. So I will start with reiterating what Darin did just say, which is information is coming out daily. I would strongly encourage anyone who has gotten a PPP loan or just wants to be more informed to be staying up to date with the FAQs that are coming out. The most recent ones came out as of May 13. They're sending those out about every day or every other twice a week, give or take. And I believe Darin will have that link at the end of this to release to everyone. Another way to get there is if you Google PPP loan FAQ, it's provided by the Department of Treasury. So another thing that came out over the weekend was the loan forgiveness application. So anyone who has gotten a PPP loan should be getting that from their financial institution in the next couple days. I know from our standpoint, we just received it yesterday, so we're going through it, trying to put together a little bit of a Q&A, so that way we'll have that information before we send it to our customers. So that way, again, we can provide them the information up front and they don't have to hopefully ask us as many questions, and we can be proactive on that side. I presume most other lenders will be doing something similar. And so be on the lookout for that if you have a PPP loan. I suspect everybody who does have a PPP loan should be receiving that application for forgiveness probably sometime this week. Some of the nice things that they did was clarify some of the things that people have been asking, such as, what are utilities and things of that nature, which I'll go ahead and just let y'all know is electricity, gas, water, transportation, telephone, and internet access, because that has been a hot question. Another thing that I wanted to let everyone know is there are still PPP funds available. Not all banks are still making those loans. First Financial, for instance, is no longer making PPP loans. Most lending institutions that are making them are unfortunately restricting it just to their customers. I don't want to speak for any other banks out there, but that is something that if you have not yet gotten a PPP loan, you only have until June 30th to do so. So if that is something that you're of interest in, you'll probably have to do a little bit of research to find a bank or a lending institution or a credit union that is still making those. As most people are probably aware, the loans did start getting funded April 3rd to April 6th for most banks and lending institutions. The first day that they could get those funded was April 6th, which the funds can only be used over an 8-week period of time for payroll, rent, utilities, mortgage interest, or interest on other debts incurred prior to February 15th. However, the actual expenses obviously need to be incurred over that 8-week period. It's just 4 things that were in place prior to February 15th. So 8 weeks from April 6th, we're getting really close. The first week of June is going to be the first time that people are eligible to start submitting for forgiveness. The way that the application works is the intent is for you to wait until the end of your 8-week period. You will put all the documentation and information that's required in that application. You will send it to the banks. So that's one thing that a lot of people are curious about. Do we send it to the bank? Do we send it to the SBA? What do we do with that? And it will go directly to the banks. The banks will review it. We're not going to be necessarily double checking the math. That's not something the SBA has asked of us. The application does make it very clear that all calculations and supporting documentation and good faith certificates are the responsibility of the borrower. Now, not to speak for any other lenders, and I should have probably prefaced all this, that everything I'm going to be sharing and answering today is my opinion. It's not that of First Financial Bank. So I don't want to speak for First Financial Bank nor any other lending institution, but we're certainly going to do everything and anything that we can to help our customers. Our goal is to get 100% of the loan forgiven if in fact all the proceeds were used for the proper purposes and it's eligible for 100% forgiveness. Another thing is that was released last Friday that impacted a lot of borrowers. A lot of people were worried about the good faith certificate or certification that the SBA was requiring as part of the loan application if the funds were necessary, for lack of a better term. And the SBA did clarify that if your borrowings or your total borrowings between your company and all of the affiliated companies was less than $2 million, they considered the lack of having a loan or aggregate loan over $2 million to be the good faith certificate. So customers no longer need to worry about that, proving up to the SBA or to anyone else that they did make a good faith certification that the funds were necessary when they took the PPP loan, unless they and or their affiliates took greater than $2 million in PPP loan proceeds. I could probably ramble and go on indefinitely about all the ins and outs, but I'd rather take the questions that y'all have after we go through the rest of the panelists. So I will pass it over to Mr. Russell.
Thanks, Cameron. I actually was looking forward to the webinar just because I wanted to hear what Cameron's seeing on the banking side. Both myself as a business owner, I'm a recipient of the PPP loan, but we get a lot of questions from business owners on that. Just there's some crossover there with our stuff. So I thought that was good stuff, Cameron. For me, I wanted to spend some time, just talking a little bit about the CARES Act and provide a little bit of information. Maybe you've heard some of this before, but maybe I can clarify some things or say it in a little bit different way. My background, I got in this industry originally. I was an interpreter for the military, and so I spent a lot of my time using those skills in this job by trying to sort of translate code sections and acronyms into English for regular business owners. And so with regard to the CARES Act, one of the things we get calls from both the business owners and the plan, the companies that sponsor the plan, we get calls from their from their participants. And a lot of times they're calling up and they're saying, hey, listen, I've seen this stuff on the news. I've read it in the paper. I've seen it on the internet. I want to do this, that, or the other with the plan. And it's important to note that while Congress passed the CARES Act, these are all optional features in the plans. And I have some stats that I kind of pulled this morning on who's adopting what, depending on the size of the company. But first and foremost, you have to amend the plan to even allow any of these things. They give you, the government gave us some, we don't have to do that now. We have until the end of 2022 to actually make the amendment to the plan. But ultimately, if you want to adopt some of the new things that are available to you, you do have to adopt them, but you're not required to. And so it's, it's completely optional. I'm going to get into what it is that was added in terms of new distribution options and the like. But ultimately, it's also important to know who qualifies for these different distribution and loan options. And they actually gave us some guidance on who qualifies. It's individuals who obviously have tested positive for COVID-19. If their spouse or their dependent has tested positive, individuals that have experienced adverse financial consequences because of COVID-19. That could include things like you have to be quarantined because your spouse has been exposed, or you've been furloughed, laid off, your hours have been reduced, you're unable to work because childcare. You have to stay at home to take care of the kids. You've lost your business, or you have a reduction in business, reduced hours. All those things qualify. The good news is if you're a business owner and your employees are looking for that, unlike some other things in the qualified plan, the 401k plan, we are able to rely on the individual employees' self-certification. In other words, we don't have to be the police on this. If they say they qualify for it, they can. An important note on that is you cannot make a distribution because your spouse has been affected. You yourself have to be affected. If the spouse has incurred some adverse financial consequences because of COVID-19, they would have to process that through their plan. I don't know how you can really say that one isn't connected to the other, but that's technically in the rules around that. So the first thing that they added was what they call a CRD. We like our acronyms in our industry. It's a corona-related distribution. It allows people, typically when you're in a 401k plan, you can't just go in and pull the money out for any reason. There's certain things that you can put in your plan that allow you to take distributions at certain times. They added this distribution option, the corona-related distribution. What it does, it gives people the ability to pull out up to $100,000. They do not have to pay the early withdrawal penalty, and the initial 20% withholding also would not be withheld, and you could spread those taxes on that distribution over 3 years. And so you have to take that distribution between, sometime in this calendar year is what it says. So again, who's eligible for that? Anybody who self-certifies that they meet the criteria that I just mentioned a little bit ago. This allows people to get access to money without necessarily having to quit their jobs, as an example, because it's really important to understand that if you've been furloughed, that's not terminated. And so, if you've been terminated from a job, you can always take your money out of a plan, or typically always can. This allows you to take the distribution even in a case that maybe you've been furloughed where you wouldn't quite qualify for a distribution otherwise. The second thing that they added was a loan feature, an additional loan feature, or the option to add an additional loan feature. It increases the dollar amount. Typically in a 401k plan, not typically, by rule, it cannot exceed $50,000 or 100% of the account balance, or 50% of the account balance. They changed the dollar limit to increase it to $100,000, and it can actually represent up to 100% of your vested account balance. However, these loans must be taken by September 23rd to qualify for that. So in other words, this provision expires off after September 23rd, which is 180 days after they didn't pick that date randomly. That's 180 days after the day the CARES Act was adopted. The second thing they did with loans is you can actually defer or stop the payments on them for 1 year. So you could take the loan and say, I don't want to start the payment for 1 year. The interest would apply. You have to calculate interest while that's going on. It also lets you, if you already have employees that have an outstanding loan, they can stop that repayment and start that in a year as well. It's important to note we work with a lot of different financial services providers like MassMutual, and maybe Mitch will comment on this in his comments, but some of the record keepers, we call those guys record keepers, they have different interpretations on what the 1 year delay means. Some record keepers are interpreting the delay to mean I can stop my loan repayment now, but it has to start 1/1. Other folks, myself included as a practitioner, we interpret the regulations to say, if I stop it, today on May 19th, I can have it stop for a full year. It doesn't have to resume until May 19th. I can't recall off the top of my head which way MassMutual fell down on that, but again, Mitch might have some commentary on that. But there's not a uniform interpretation of that rule. And Cameron and I were talking about this a little bit yesterday. The reason for some of these confusions around the PPP and the CARES Act is this is one of the few times in the legislative process where you get a piece of legislation without any regulations. So in other words, typically a piece of legislation is passed, and then in my case, the DOL and the IRS will get together and they'll write regulations around what does that actually mean. They didn't have time to do that with the pace of play that they wanted to go at and get these things out. So, some of these things will be defined later on. Cameron mentioned about the definition of what's forgivable has, just coming out now after the PPP stuff has been online for a while as well. So more to come on that piece. The other piece is that RMDs or age 70 and a half withdrawals, there's sort of a holiday for that for this year. You don't have to take those this year. Most providers are interpreting that as a holiday, meaning I don't have to take them. I'm just not going to process them, absent somebody specifically asking for them. Other providers are saying, hey, listen, unless you tell me otherwise, we're going to continue to process them. So I think the word of caution I would give you there is that you've got to understand, if you have a 401k plan right now, you've got to understand what is your provider doing and what are your options. And again, you don't have to adopt any of these things, or you can adopt them all or none. And I'll end with a couple of areas of consideration and a few stats. One of the things we're seeing right now is if you have a safe harbor plan, maybe your business is having some adverse economic effects and you're thinking about taking that off, or you want to remove that safe harbor feature to try to reduce cost. The word of caution there is that you really want to think about what other compliance impacts that could have, because sometimes you may run into another testing issue that you didn't anticipate. The other thing about that is if you are thinking about doing that, you do have to give a 30-day notice. So if it's something you're thinking about, get with your providers and have that conversation with them. The second thing is if you're a business owner who has had to lay off people or let people go, and those people are not added back by the end of the year, you may have what's referred to as a partial plan termination. And when that happens, any employee that was let go in that time, in other words, if you laid off more than 20% of your workforce, then that's a partial plan termination. You will have to 100% vest those folks. And so be careful as you let people go not to take the forfeitures and use them for some other purpose. Some quick stats on the distribution option. There's a dichotomy between what small employers are doing and what large employers are doing. As of the last stats that were published by the Profit Sharing Council of America, the nonprofit org that kind of follows these things, the large companies, 70% of them are adding the distribution option, while small companies, only about a little more than a quarter of them, about 27%. In terms of adding the additional loan features, the additional limits, about half of large companies, 48%, while only 17% of small companies. And the same thing with the stopping of the loan to delay it for a year, about 20% of small companies and 60% of large companies. I think the challenge is the smaller your company is, the more administrative hassle this is, especially on stopping the loan and then who's going to restart it or how is it going to restart, because different payroll providers are all over this isn't something that any of the payroll providers had ever, programmed for. It wasn't anything that MassMutual had ever programmed for. This is brand new legislation that we all had to read, interpret, and execute on in a very short amount of time. So with that, those are the highlights, I think, of the CARES Act that are most relevant, the things that we get most questions on from both the plan participants and the business owners. And if you have any questions out there, I think Darin mentioned earlier, use the chat thing. We're more than happy to answer questions and look forward to any that you have. I've been doing a lot of these webinars. I've had as many as 1,000 people on one of the webinars we did for our client base. So I know there's a lot of questions out there, and things are always evolving. So with that, Mitch, I think I gave you a couple of things that you might chime in on as to what MassMutual is doing, but I'll turn the rest over to you.
Yeah, very well said, Russ. Appreciate the commentary. Appreciate Cameron giving the update on the PPP. I too was excited about hearing more about how we can help our mutual businesses that we help serve and get them access to capital in a necessary time frame. And one of the things that I wanted to highlight, Russ mentioned that we were thrown a lot of information from a regulation standpoint, and we had to turn it around almost overnight. And not only did Russ's firm do an exceptional job, but our folks at MassMutual did a wonderful job. I really think the industry did a fantastic job of turning around things on such a short notice. And, we're experts in this matter, and we've got the folks internally that can make this happen. One of the things that really is concerning is how much information is being thrown at you as business owners, because you've got so much to digest in really a short amount of time. And it's so important to rely on the resources that you have. Hopefully AB is a resource, myself, Russ, all folks who have been in the industry and can really give you guidance that's specific to you. And Russ talked a few about different stats around what small businesses and what large businesses are doing. I tend to echo some of that just from firsthand experience. I was working with a small electrical group, and they did not want to go forward with the additional loan provision. And I think if you are thinking about some of the loan provisions, the first thing that comes to mind for me is, well, if somebody has access to $100,000, we want to make sure that they're properly educated on what that means, and they don't just go out and buy a boat. We've seen things like that happen, and what they don't realize is it's a 5-year payback, and half their paycheck might be gone. And while they might be really happy with a new purchase of a new boat or an investment property, it certainly is not going to be good for their monthly cash flow. And so I think really what I'm trying to get at is education is so critical. And I think it's very, very important to rely on the support of the folks that you lean on in this space now more than ever. A lot of times, you know, at least in my experience of being in this business over the last 17 years, the retirement plan benefits has kind of fallen by the wayside. It may not be as important as some of the other things that you've got going on. And I think it's as equally as important. So just generally, I think it's really important for us to lean on those resources now more than ever. One of the things I did want to share was around what your employees are facing. And just from our call center over the last 2 weeks, I was able to pull some data on why employees are actually calling into our call center, which, by the way, our volume's up quite a bit. In the last 2 weeks, we've taken just about 42,000 phone calls from employees nationwide. About 20% of those employees have been terminated, which really kind of are parallel to what we're hearing with the job loss numbers out there. 12% are calling to initiate loans, or they're calling around maybe to pause loans. And Russ, to your question, as far as what are we doing, we're looking at 12 months ahead, so not as a 1-1. So thanks for that. 11%.
We agree with your interpretation.
Yes, absolutely. And we think it's the right one. So 11% of folks are calling in for hardship. And what's interesting is around investments and contributions, which we would think most employees might be calling in to perhaps stop contributions or perhaps take investments and go completely to cash. They haven't been doing that as much. We're seeing only about 7% of employees making contribution changes. If we've taught them right, and AB and the messaging from Mass Mutual, we try and tell folks to buy on dips, you know, and there's been a large, you know, once a year sale that's happened over the last couple of months. So some of those folks have taken advantage and have increased their contributions rather than decrease, which we think would be the right thing for somebody that is a long-term investor. So just wanted to provide some of those stats on what we're fielding. You know, I think it's definitely important to be educating your employees. So if there's something that we can help provide you all, if you feel like there's a gap, an education gap currently with the way that you're being serviced from a competitor of mine, a competitor of AB's, or a competitor of RUSS's, this is where the great really separate themselves. And we think we can absolutely be extremely critical to helping your employees maintain a long-term view for those that do have it, and make sure that they don't do the wrong thing at the wrong time. Because I think making a decision, whatever level, whether you're, you know, as an employer or an employee, making a decision in a time of crisis and confusion can be really detrimental to your business health as well as the employees. So just please lean on us if you've got any questions whatsoever. We're happy to help serve you there. I'll add a couple other things that I think is pretty critical. We might address this in the panel, but if you've applied for the PPP, obviously, you know, all businesses are in different levels of what their cash flow looks like, what their cash buildup looks like. And I think what is imperative, obviously, if we've taken the PPP as business owners, we're obviously, you know, concerned with what future cash flows from, you know, our business generates in revenue. And in that same manner, I think it's a great time to evaluate not just your retirement plan, but perhaps overall your group benefit costs and any costs, for example, to try and mitigate them in the short term. And there are strategies around that of ways that we might be able to help restructure some of those hard dollar costs and perhaps utilize some features here at Mass Mutual as well as Nova to create a soft dollar way to pay for some of those expenses. That being said, Mass Mutual has actually waived all participant distributions and loan origination fees, including working with Nova, because what you may or may not know is if you're utilizing a third-party administrator in that retirement plan setup that you have, there may be a cost for the employee in two different ways. So Mass Mutual would charge a fee traditionally, and then Nova, and these are nominal fees. I mean, we're just taking time from our administrators, and we're typically charging $50 for a distribution. And Russ, I think you guys traditionally might charge $50 or $75. I may not, somewhere around that. But Mass Mutual has actually offered to not only cover the cost for that distribution on our end, but also for the third-party administrator side as well. So we've really done the right thing and have stepped up for participants to get access to their money without any additional fees. So I'm very proud of our organization, and a lot of organizations can't say that. So with that, I think what I'll do is I'll pass it back to Darin and welcome some more questions.
Awesome. Thanks, folks. Really insightful information, and a lot more around that than I think I anticipated myself, even coming into this. And so appreciate your input and appreciate your feedback. We have received a few questions, and so I'll start with the first one. I'll just open this one up to the panel as a whole and see what you're hearing your customers are doing, and if you've got any direct information on that one. But one question is, what are the best options for the 501c6 organizations? So certain nonprofits were not included in the PPP funding, and the 501c6 are ones that are currently not. I know there's some legislation going on and some lobbying going on right now to try and get this group incorporated into the PPP and eligible, but to date I haven't seen that come through. Do any of the panel, do you have any ideas or thoughts on what the 501c6 folks can do?
I'll start by saying, Darin, you're absolutely correct that up to this point, there has been nothing that allows them to be eligible for the PPP. Why Washington made certain decisions, obviously none of us can speak to that. I think it all comes back to what Russ was indicating, that it was a time crunch, and they didn't do everything right, but they didn't do everything wrong. They just had to get it in as quick as possible. I'm unfortunately not aware if the EIDL loan program was allowing 501c6s, but I do know that at this point in time, my understanding is that the funds that were available for the EIDL program outside of agricultural businesses have dried up. And again, at this point in time, my understanding is that the EIDL loan is currently only eligible for agricultural businesses. So unfortunately, that would not be a good resource. So I hate to have my answer be that neither the PPP nor the EIDL, which are the things that I know at least a little bit about, really aren't a good option there. But at least in Bryan College Station, and I think the Chamber of Commerce has done a great job getting this out, but both cities do have some grant processes. I think that they go up to $25,000 if I remember correctly. But those are available here in Bryan College Station through the cities, and I think there's a number of other funds that have some availability that you apply through. And again, I think the Chamber of Commerce would be a great resource for that information.
Yeah, the chamber's got a lot of great resources. The 501c6, you want to work with your accountant. You are still going to be eligible, at least from what I could find, for another group, was the employee retention tax credit. And so everybody needs to look into that. And I'll send a link out to the IRS details. You're correct, Cameron, on the EIDL, that folks are eligible. The 501c6s are. Funding wise, I think that's a question. I encourage everyone, if you're a 501c6, to get a hold of the Chamber of Commerce. I think Cameron's correct. There are some grants and fundings around there, as well as the Small Business Development Center. Reach out to that team, either depending on where you're located. Locally, you can look at, if you're in College Station area, you can look at the Bryan College Station group. They're in the same office as the chamber, but then you can look at Blen as well. But the SBDC, they've been doing a pretty good job. They're an arm and partner with the SBA, Small Business Association, and they've been doing a good job of identifying different types of funds that are out there and that can help. But your one bet is going to be to look for the different types of grants that you may be able to find. You know, Facebook, Google, some of those groups have even putting grants out that there may be still be a little bit of funding left as well.
This may not be directly related to the question because it sounded like it was a little more on the PPP side, but with relation to the CARES Act, there was one specific targeted delay for non-for-profits with their 403B plans. They are all under a required restatement window. That deadline was April 30th, which kind of like falls dead smack in the, well, hopefully, you know, it's the middle, right? We're heavy into it. Anyway, it was 3/31. And so the 403B restatement has been extended. If you were somebody that either didn't know about that or you hadn't restated your plan yet, you now have until June 30th to have that plan restated and avoid any sanctions associated with not getting it done.
Great. All right, Cam, I don't know, are you able to see the Q&A box?
I am.
All right, you got highlighted and called out specifically for this one. So
Yes,
for those on the call, if you can't see it, the question is around funding decisions for the PPP, and basically the multiple interim final rules, FAQs, and kind of how banks are making decisions, and then how you forecast or foresee the funding and the decisions to come forward.
So the question really hit the nail on the head of there was a lot of changes that came throughout the process of the PPP loans. For those of y'all that got funded quickly or maybe even got funded later, both of those would have been heavily affected by all the changes, because there's loans that were funded on April 6th that then we had to go and notify the borrower, hey, this, that, or the other changed. And obviously, everyone's been trying to pass along that information to the best of their abilities as it comes in. But the question here also specifically asks, with the forgiveness application, what is my opinion? Do we think that it's going to change 75% and remain 25%, 50-50, 25-75, something of that nature? I will say, based on the couple of times that I've read through the forgiveness application now, the SBA did do as good of a job as I could expect them to, given all the time frames of trying to identify and answer a lot of the questions that are going to come up. But unfortunately, I also see a number of glaring errors, or just not errors, but omissions. The biggest one of which I really don't see much that addresses sole proprietors, those that file a Schedule C, the eligible self-employed, those that became eligible with the second round of PPP funding and came eligible after April 10th. And that's a large number of loans. I think for us, it might be 25%. I don't have the exact numbers, but it's a big amount, and that's something that really isn't addressed. So to get to the heart of the question, there were 6 or 7 interim final rules, which I know we all recognize the oxymoron of that name, that came out just during the origination side, and there's still possibly more to come on the forgiveness side. I would anticipate a couple of IFRs coming as well. So I think the meat of the application for forgiveness that's out there is going to remain unchanged. I think what they're going to do is fine tune it and elaborate on some of the things, such as when I said the definition of utilities, they use the word telephone. Well, the question's coming up, is a cell phone a telephone? My opinion is yes, but I wouldn't put it past them to go ahead and clarify that. I hope that they do, just so that there is no further question on that in particular. But I think that probably 25% is going to be expanded upon, but the meat of what's there for the application for forgiveness, I think is going to remain unchanged. But that's just my opinion.
Thanks, Cameron. Another question for the team is, how are you all keeping up with the different regulations out there? as they're changing, as Cameron, you've mentioned, how are each of you finding reliable information, and what sites or resources are you leveraging for the best ability, or to increase your ability to make the best decisions you can?
I'll go ahead and start this one. And, we're getting a lot of information on a weekly basis from the different providers out there. And MassMutual has been one that has conducted some webinars specifically geared for advisors to provide information on the changes in the CARES Act, things that, employers need to be looking at, things that participants now may be able to do that they weren't prior or a few months ago. And then our home office at Raymond James, they put out a weekly webinar to not just talk about 401k side of things, but what's going on with the economy, what's going on with the stock market, because the last couple of months have been high volatile. So like you said, Darin, there's so many changes going on in both legislation and the stock market is ever changing. And so our home office, as well as the providers that we work with, have been doing been a tremendous resource for us in providing us with the information that we need in order to effectively do our job and serve our clients.
I'll follow up on that. So as I mentioned earlier, the FAQs that we're relying heavily upon here at the bank are coming directly from the Department of Treasury. My goal, and I think kind of what First Financial has done as a whole, is we're really not releasing anything that does not come directly from the SBA, the Small Business Administration, or the DOT, the Department of Treasury, just because there's a lot of great information out there, but there's a lot of great information out there that's slightly misinterpreted or has some bias. So if it's not directly from the DOT or the SBA, for the most part, we don't feel comfortable releasing it. I know that came about a lot in the first couple weeks of PPP and leading up to it, that, there was great resources out there that were putting out a lot of information, but at the end of the day, it wasn't accurate, not because they meant for it to be inaccurate, but just because, again, there's biases or there was a lack of information. So one thing that I would encourage everyone, obviously your lending institution on the PPP loans in particular should be a great resource to answer the questions. But at the end of the day, it's going to be their interpretation and you got to understand it as that. So I would recommend highly that you go out and you pull the information from the SBA and the DOT, because again, with PPP loans in particular, all the information that the SBA has released has said that all the certifications and all of the calculations and all of the information that you're presenting, you, the borrower, are the ones certifying that to the SBA and to the lender. So again, all lenders, I believe, are going to be out there helping y'all the best that they can, but the burden of proof, for lack of a better term, really lies upon you. So ask your lending institution to refer you to those places if you're unable to find them online, but most of it, from our standpoint, we're going straight to the Department of Treasury's website and the SBA's website.
And I'll just jump in on not only how we're digesting all the information, but we've got our lead regulatory consultants who are constantly looking at what regulators are doing, where they can offer further clarification and guidance. But what more importantly is, how are we disseminating that information to the plans that we serve? And we've actually got a CARES Act weekly update podcast led by our lead regulatory consultant, Eric Lieberson. This past week, we've got alternatives to plan termination. So they're very short. This one's about 8 minutes. And then we've got an additional podcast that actually help offer that clarification that is 6 minutes. So it's not just digesting it, but how are we getting it back out to the businesses that we serve as the retirement plan record keeper or provider, both interchangeable. And that's really important for us to get that information out to you. If it's something that you are interested, let us know, and I can definitely forward you the links to our podcast, because I think there's a lot of great ideas out there.
And then Darin, on our side, I shared a couple of links with you as well. I think for me, we're just like any other industry. We have our super technical resources to include, reading the regulations. I have 2 RUSS attorneys on staff. One of them is a former Department of Labor senior investigator. So these guys love, they're probably watching C-SPAN in their spare time. But we have a couple of professional organizations, but I think for the folks on the webinar right now, I shared a couple of links that are easy to consume public information site. One I referenced in my few minutes of talking, the PSCA.org, the Profit Sharing Council of America, that's called. So it's a nonprofit that's designed to try to disseminate information in an easy to understand and consumable manner. And then the other one is plansponsor.com. Which is an offshoot of the Plan Sponsor magazine. And again, their target audience is small business owners and informing them on what's going on. So both of those sites are easy to consume, easy to understand. We're getting daily updates through those things, in addition to the things we would look at as professionals in the industry. But those 2 sites there are really good resources, for the average business owner to take a look at.
Great, thank you. Yeah, and so for those on the phone, I've shared those in the chat line, and we'll work to include those in the email that I'll send up following this. How about for companies that have a retirement plan? Are there any forms or anything like that my employees or our employees will need to fill out as it relates to the distributions that they may or may not take during this time?
Well, that's a good question, because that was one of the things, as Mitch mentioned, we all had to move very, very fast. So as a practitioner, because I have the delayed necessity to actually amend the document, I can pretty much take instruction and I'm ready to go on my side. The challenge is on the record keeping side, because now you have new forms of distribution, which is another way of saying a liquidation. Anytime you liquidate money out of a retirement plan, you have a taxable consequence. There's a 1099-R produced. It tells the government what was withheld, what was supposed to be withheld, is there a penalty associated with those things. So the record keepers had to really, really program at a rapid pace. And they do need a form. They had to have a new form. At this point, all those forms are online. So your traditional loan form or your traditional distribution form wouldn't do that. All the record keepers, all the service providers now have special forms for the CRD and the loan, because again, there's a couple of different features on the distribution. You have the self-certification. So there's typically a box where they're self-certifying that they meet the criteria for the distribution. And in the loan, you have, if you're going to offer things like the delayed start of the payment, you have to be able to indicate those on the form. So the forms did change. Those are all online and available from all the record keepers. We work with probably 35 or 40 record keepers, not heavily, but in some way, shape, or form. I'm not aware of anybody that doesn't have those up and running, but it is, you can't use your traditional forms that you've been using for, years with your providers. These are new forms. Darin, so that's a good question.
Good. It's not often that I have this many financial brains available to pick their brains and get their knowledge. So I'm asking maybe a little personally, but also just for my clients and everyone else in the call. But realizing this is going to probably be more of a personal opinion from each of you, but with what we're seeing in both economy and financial markets, what's 1 or 2 tips that you have for businesses, nonprofits, and these types of things when it comes to offering a retirement plan, or even maybe, Mitch, you had offered a great piece of insight of potentially, this is the time to ramp up your investment in these dips as opposed to reduce. But what are some advice that you have for companies out there right now and or individual investors?
One thing that I have and that I've seen with a couple of my clients is that have profit sharing plans is they have moved up the dates where they make their profit sharing contribution while the market has been so low. And now that's different for everybody, and it depends on the company's cash flow. But you have the option as a business to make your annual profit sharing contribution earlier in the year when the market may not be doing so well, and it was down 30% a little over a month ago. And so that is one option. The other thing that companies can be doing is, well, the Department of Labor now expects companies to benchmark their retirement plans at least every 2 years. And, by doing so, you can, like an insurance agent, you can potentially reduce the cost, and which will allow the company to be able to repurpose those dollars elsewhere in other areas of the business that may need it. Or, even if it reduces the participant cost, it could help them recoup those losses that we saw during the market sell-off sooner when the economy does get back up and running again.
Darin, I'll jump in here just from the plan design perspective. I would quote two famous philosophers. Isaac Newton said, for every action, there's an equal and opposite reaction. And then Yogi Berra once famously said, if you don't know where you're going, you might not get there. And so if you think about those two concepts, in a 401k plan, when you do something, it affects something else. You may solve one problem, but you may create another one. So, thinking about Yogi Berra's comment, understand what you're trying to do and where you're trying to go. And then, work with folks like, AB or myself or Darin, maybe even your firm, when it comes to getting, or your bank or anybody, when it comes to getting advice on these things, understand what your options are. Don't just say, I got to do this. Again, there's an equal and opposite reaction sometimes to one thing that you fix or solve. So just try to understand where you're going. And I think there's a lot of resources out there to help you to get wherever it is you want to go. And if you don't know where you want to go, there's people that'll help you, understand that. And I know my firm, Ab and his group do a great job, trying to assist business owners with that. We understand that at the end of the day, you make money doing something else other than, in my case, running a 401k plan.
So in the spirit of quotes, one of my favorite investors of all time, Warren Buffett, he famously mentions, be greedy when everyone else is fearful and be fearful when everyone is greedy. And I think, that really weighs in quite a bit. We've had quite a euphoria over the last decade and really haven't paid much attention to our 401k investments as a whole, as most participants kind of set it and forget it. And now we've gone completely reactionary to a short-term event that in 2 or 3 years, for those folks who have stayed the path, have stayed the course, or even increased contributions and tried to max out their 415 limits, that 19,500 or 26,000 if you're over 50 with the catch-up contribution, now's the time to do it. Because I think if you've got the extra capital to do it, I would certainly look at that. The other thing I would say for business owners that would like other areas to shelter dollars in tax deferred assets and doing them in ways that are asset protected against creditors, I would certainly look at some other additional advanced tax strategies around retirement plans that are available to you, because we notice there's quite a bit of stimulus going out there. Who do you think is going to pay for that? We all are, right? And so how are we going to do that? Most likely, taxes are going to go up. And so if we think taxes are going to go up, both at an employer and individual level, I think some of the things that I would be doing if I was a business owner would be looking and start understanding about some of those other tax strategies through these retirement plan vehicles that exist to you outside of just a 401k profit sharing. So that's something that I would definitely be investigating and maybe be pulling the trigger, in 2021 as things do settle and we come back into a new normalcy.
Yeah, and I do see there's a question in the box. I think that would be directed to me. It says, is January 1st, 2019 the date, or some other that the IRS is using to not assess a penalty on early withdrawal of retirement? It's a really good question, because although the regulation wasn't passed at the beginning of the year, they did go ahead and put in there that you can retroactively, all distributions, assuming again that you qualify as an affected person under the self-certification rules, it is retroactive to January 1st. Now, if you took a distribution prior and the taxes were already withheld, or the early withdrawal penalty as an example, you'll unfortunately you can't undo what was done, but you can take advantage of the fact that the early withdrawal penalty would not apply. And to the extent that you wanted to pass the taxes over a 3-year period, you could also do that. You will actually have to work with your individual tax professional at the end of the year. You'll just handle that on your taxes. But the regulation is retroactive to 1/1. So any distribution that was taken early on in the year can be recategorized as a COVID-19 distribution and thus not be subject to the early withdrawal penalty. Really important point for the individual that asked that question.
Very helpful, thank you. And folks, this brings us about to the end. We're right at 1 hour, and wanted to just kind of offer one last question or one last thought from folks. If you've got anything you want to add, if we missed anything that you'd hope to get out there from our panelists. But I have one last question for myself. If I wanted to set up a 401k for my staff, who do I call out of this panel, or what do I do?
Ab, I'm going to nominate you. Well, as the advisor of a 401k plan, we, our role is really quarterbacking amongst the different parties that are involved. So you have, the advisor, you have RUSS, who is your third-party administrator, and MITCH, who would be the record keeper of the plan. Now, if you're wanting to to start up a 401k plan, first person we're getting on the phone call with is, RUSS over at Nova, because we got to figure out, what, they're very instrumental in the design process of the 401k plan. So we got to figure out, what is it exactly that you're wanting to accomplish, and what can we design into the plan to help you accomplish that. And so we would work on that, then we would get estimates as far as, what, based on your employee demographic, what are your estimated contributions going to be based on national averages. And then as the advisor, we would reach out to multiple different providers that we work with, and get proposals back from them. And then from there, we would really be presenting it to the business owner, give our opinion, of course, but going over the cost aspects from both the employer standpoint, the costs that the participants would be paying that's embedded within the plan, and the non-expense categories that include what does the record keeper have available on their website that could benefit my team members. And one thing that I love about MassMutual is they have a Map My Finances tool to where you can pull all of your all of your 401k information and pull that with your insurance benefits. The employees can see that all in one place, and it's an interactive tool that they could play around with based on their information, their spouse's information, their kids' information, and help them understand some of the outcomes of the decisions that they could make.
And Darin, I lastly, I'll just chime in here as we're kind of over that hour mark. But one of the things that I did want to mention, obviously, we've seen an enormous amount of individuals refinance their homes, right? And in this environment, you've got a low interest rate environment. Folks looking to capitalize on that, lower their monthly payments. They're able to save a little bit more dollars, stash some cash. The very well can be said for retirement plans. So if you haven't had a retirement plan repriced in a few years, I would definitely reach out to AB and see if there's a way that we might be able to refinance your 401k as well, help reduce some of the cost around at an employer level, but also perhaps the participants as well. If we're able to lower whatever asset charge that's typically associated to participants as we recover, as this economy recovers. Those participants are going to recover quicker if they've got less investment drag, and that investment drag equals what those fees are. And, we just, being in the industry for quite some time, both AB and RUSS, we've seen some really expensive plans out there. And look, sometimes the service will definitely represent and warrant that cost, but a lot of times you might find that you can get some really great value out there with getting better service. So just keep that in mind. I just, wanted to share that. If you're paying a hard dollar TPA cost, there certainly makes a lot of sense from a tax perspective if you're a majority of the 401k assets. But look, if you're strapped for cash, there's a way that we can pass those along and turn those hard dollar costs into a soft dollar item in the short term. If you're a larger employer and you're paying for an audit cost, there might be some strategies where we might be able to take that $10,000 that you're required by law to pay for that audit and alleviate that and pass it along to the employees if it makes sense, if we're able to reduce costs for the participants as well. So just wanted to share that.
Great. Well, thank you, folks. Thanks to those attendees that joined us today to learn more about this and these topics. Thanks to the Chamber of Commerce for partnering with us in the SBDC to offer these things once a week or so. And just want to thank each panelist again and appreciate AB for bringing this group of experts together. And thank you all for your time.
Thanks, guys.
Thank you.
Thank you all. I really appreciate y'all joining. And Darin, thank you again for all your hard work in getting, putting this together.
I appreciate it. Appreciate the opportunity. All right, folks, be safe out there.